For years, American financial markets were the envy of the world. They seemed unstoppable, a magnet for investors seeking growth and stability. But today the picture is different. European markets are now outperforming their American counterparts, which is a pretty dramatic shift that reflects changing global dynamics. And this change isn't just about numbers, it signals a fundamental shift in how investors view the world's economic powerhouses. The reasons behind this change are complex, but one factor stands out: the impact of former President Donald Trump's America First trade policies. These policies, which were often unpredictable and disruptive, have shaken investor confidence in the U.S. economy. Meanwhile, Europe, once seen as lagging behind, has actually emerged as a haven of stability and opportunity. This shift in market sentiment is evident in key indicators. The euro, for instance, has surged to a 3-year high against the U.S. dollar. That kind of move suggests that investors are more confident in the Eurozone's economic prospects than in those of the United States. So this shift in sentiment is not just a temporary blip. It really reflects a fundamental reassessment of global economic power. Donald Trump's presidency marked a turning point in global trade relations. His America First agenda, while intended to protect American interests, often backfired, creating uncertainty and volatility in global markets. Tariffs imposed on Chinese goods, trade disputes with close allies like Canada and Mexico, and a general withdrawal from multilateral trade agreements all contributed to a sense of unease among investors. This uncertainty was further compounded by Trump's unpredictable decision-making process. Trade deals were often announced and then abandoned, leaving businesses and investors scrambling to adjust. This unpredictability made it difficult for businesses to plan for the future and discouraged long-term investment in the U.S. economy. The result was a decline in investor confidence in the U.S. economy. And honestly, this decline was not just limited to foreign investors. Even American companies began to look elsewhere for growth opportunities. As the U.S. retreated from its role as a champion of free trade, Europe stepped in, negotiating new trade agreements and positioning itself as a reliable partner for countries around the world. In contrast to the uncertainty surrounding the U.S. economy, Europe has emerged as a beacon of stability and predictability. This is reflected in the strength of the euro, which has benefited from a flight to safety by investors seeking refuge from the volatility of the US dollar. But, Europe's appeal goes beyond just a strong currency. Investors are also attracted to the Eurozone's relatively stable political environment and its commitment to fiscal responsibility. While the EU definitely has its share of internal challenges, it has shown a remarkable ability to weather economic storms and emerge stronger. This resilience has been particularly evident in the wake of the COVID-19 pandemic, which the EU handled with a greater degree of coordination and effectiveness than many had anticipated. This stability is reflected in the performance of European assets. German government bonds, for example, are considered among the safest investments in the world, and they have consistently outperformed US Treasuries in recent years. Similarly, European stocks, while initially lagging behind their US counterparts, have shown greater resilience and are now seen as offering better value for investors. Looking ahead, there are reasons to be optimistic about the future of the European economy. The European Central Bank is expected to continue its accommodative monetary policy, keeping interest rates low and providing support for growth. Meanwhile, governments across the Eurozone are increasing spending on infrastructure and other key areas, further boosting economic activity. Germany, in particular, has announced a massive investment program aimed at modernizing its infrastructure and bolstering its digital economy. This program, coupled with the ECB's accommodative policies, is expected to provide a significant boost to the German economy, which in turn will have positive spillover effects for the rest of the Eurozone. However, it is important to note that risks remain. A prolonged economic slowdown in the US could have a negative impact on Europe, as could a resurgence of trade tensions. Moreover, the COVID-19 pandemic is not over, and new variants or a resurgence of the virus could derail the global economic recovery. Despite these risks, the fact remains that Europe is in a much stronger position than it was just a few years ago. With sound economic policies, a commitment to fiscal responsibility, and a stable political environment, Europe is well positioned to continue its economic outperformance in the years to come.